How will US tariffs affect Canadians in or near retirement? I talk to Canadian retirees every single day, and I'm hearing a lot of concern about rising costs, the market, and the fear that these tariffs could force some into delaying retirement. And so in this video, I'm going to share what I've been telling my clients to help ease those concerns, so you can avoid making any short-sighted decisions that you may end up regretting. Unless you've been living under a rock, you are very well aware that there's this tariff war going on. Now, what could tariffs do and how could they affect a retirement decision for you or someone that you may know? As tariffs get implemented, it could cost more to buy things, buy anything. So anything that's imported into the country or even out of the country could have a rising cost to it. And as we've experienced since COVID, we've had a lot of rising costs, and I think people are sick and tired of it. And so we've had rising costs, we have another bump in rising costs, and it's causing a lot of people to put the brakes on, should I retire now? How long is this gonna last? Are my investments going to be affected both short and long term? And can I even afford to retire anymore? And as we see rising costs, we're seeing the potential of rising inflation rate again. And again, we've been through this inflation period for many years now, and it feels like we're just near the end of it. And it could pick up. We don't know yet. There's a lot of uncertainty around tariffs. And I know this video is going to come out after the April 2nd deadline. But there's still going to be a lot of moving parts going forward. And how do these things settle out? What's the negotiations that happen? All of that are going to drastically affect what happens in the market, what you're paying in the grocery stores for gas, for food, for everything. So a little bit of a bump, we might get up to 3-4%. We'll see. We don't know where it's going to go. No one has a crystal ball. But I wouldn't be surprised if we see a little bit short-term bump on inflation, meaning that some of the costs of things you buy on a day-to-day basis could potentially go up. Now, what does this mean for your retirement plan? Well, if prices go up, you might actually need a little bit more money. So that's where you have to understand that, well, if I don't have a little bit extra more money, then am I going to spend less in other areas? So it might be less travel. It might be less sports, hobbies, whatever it is, whatever's eating into your budget. If it costs more to put food on the table, the necessities, some of these other peripheral things are going to get cut out. Short-term market reactions to tariffs are absolutely normal. We see short-term market reaction to many things, and we have for many years, and we will continue. And I think this is something you have to really grasp as you prepare for and walk into retirement, in that all of these bad news bears are not behind you. In fact, many of them are still ahead of you. Now, right now, it's tariffs that are causing a lot of short-term fluctuation in the market, costs rising, etc. But next year it'll be something different. The year after that, something different again. There's always going to be something different. Nobody has a crystal ball on what it is, when it'll happen, and how it'll affect us. But I do have the crystal ball to say that this is not the last time we will have a hiccup going forward. So if these short-term fluctuations really scare you, and there is cause for concern, don't get me wrong, but if they're scaring you to the point of delaying retirement, then I think you need to really take a grasp of, am I doing things the right way? Because we're going to continue to see these short-term market fluctuations. Again, if planned properly, it shouldn't derail or delay your retirement. So don't let those short-term fluctuations, whether it's in markets or in inflation rates, make your decision to retire delayed. Now, one way to do this is proper cash flow planning. And we always talk about a cash wedge. So as you enter retirement, know where your money comes from, how much is coming, and then prepare for that. Put 3 to 5 years aside in a high interest bearing account. Now I get it, if inflation goes up, things cost more, you might need more. But if you're not prepared at all, you're in a really tough situation. And that's why as you lead up to retirement, you wanna make sure you're doing this preparation in the years leading up to retirement. If you knock on a financial planner's door day of retirement and say, I need a plan, and you get a good plan together, it doesn't mean your portfolio is ready to match the plan. It might take some time to roll out. And if you're doing that in a time like this, it could create some uncertainty. So sit down with your financial planner, and again, do you have the ability to generate the next year of cash flow? What happens if markets drop further? What happens if they bounce back up? Like, there's so many ways this could go. But cash flow and cash wedge can be king in times like this. So as you go forward into retirement, maybe you're putting the pause or the brakes on right now, but as you work forward towards retirement, maybe you're already in retirement, it's times like this that having that cash wedge really brings peace of mind. I can tell you that firsthand. Our clients have that cash wedge. It brings peace of mind. They know they're getting that paycheck every week, 2 weeks, every month, however they're getting paid. without having to worry about markets. Yes, on paper, their stocks are down a little bit, but the reality is we're not selling anything. We're drawing out of dividend cash flow, maturing bonds, and other pure cash flow that's coming in without touching anything that's in the market. So again, that needs to be your goal as you walk into and through retirement, is be prepared for times like this. We're going to see it again, like I talked about earlier. So whether it's tariffs, whether it's anything else, it will happen. How deep it happens, how often it happens, when it happens, we don't know. So make sure your portfolio is prepared for the cash flow that your retirement tax plan indicate that you need to take out, because it's very important that you still draw out, especially those registered accounts, like that RSP meltdown. That's your tax planning. Don't let all of that tax planning go to the side because you haven't planned for it accordingly. All that means is CRA is going to get more money. Trust me, we already pay them enough money. Let's figure out a good plan and then make sure that we have that cash wedge and the investments actually align with the plan, so that, again, these short-term fluctuations like tariffs don't derail your retirement plan. My next point is that don't let headlines in the news delay your retirement. The problem with that is there will always be another headline tomorrow and then another headline. And I've talked to many people that have fallen into this trap. They've delayed it because of this. And as soon as they were going to pull the trigger, guess what? Something else came up, and then something else, and then something else. And it never ends. And what they do is they burn away their go-go years of retirement. They have way more money to retire than they ever need. And they put themselves in a situation where they actually have worked their whole life. They burn through their retirement because of the stress and concern and don't know what the best time is. Again, this is where sitting down with a financial planner and getting a proper plan done and saying, look, yeah, I know it's bad news. It's always going to be bad news. You can always find a news station that will give you bad news. And if you always turn that on every day, it could delay your retirement. Unnecessarily, though. With all the bad news out there, there's still lots of good news too. The good news is that you've hopefully saved for retirement for 30, 40 years. You have a good nest egg. You can build a proper plan and investment structure to protect yourself going forward through retirement. So don't let headlines continually delay your retirement because there's no end in sight. When it comes to retirement, focus on what you can control. There's so much in this world we cannot control. You understand that. But when it comes to your retirement plan, take control of what you can actually control. Worry about what you can actually control. So some of these are your spending rate, your saving rate if you're not quite at retirement, your tax plan, your tax strategy, your cash flow planning. These are all in your control. Stock market returns, that's out of our control, right? Tariffs, out of our control. Tax rates, essentially out of our control unless we leave the country. And even then, it's still out of our control. There's a lot of stuff we can't control. But your spending rate, your savings rate, your cash flow plan in retirement, your cash wedge, these are things that we can control. So take back what you can control because it'll put you on a better path for and through your retirement. My next point is that tactical moves outweigh emotional decisions. And definitely when we go through times like this, emotions ramp up. We all get emotional on what's going on and how we're being affected, and I get it. It's frustrating. I see it day in, day out. I see our grocery bill. I have 4 little kids. Trust me, my grocery bill continues to go through the roof. It's unbearable almost. But at the end of the day, you need to try your best to keep emotion out of it. What are tactical moves, smart, wise moves that I can do with my finances, with my retirement plan? And in times like this, if you haven't planned properly, maybe you're in retirement and you're like, I know, Adam, this is really starting to affect me. Like prices going up, markets are going down, like everything's moving in the wrong direction from where I thought we would be. Well, maybe you need to cut some discretionary spending. Maybe you need to review your budget. Maybe you need to plan ahead now. Like make sure when this happens again, whatever it looks like, that you're better prepared for it. So again, look for some tactical decisions, some wise decisions versus emotional ones. Emotional decisions equal long-term regret. And I've talked to a lot of people over the last 3 months that have completely sold out of the market because they have no idea what's going to happen. They've now delayed their retirement. They're making all of these emotional decisions. And they haven't really sat down with anyone that knows what they're doing, has gone through this many times. I mean, I've been doing this for 2 decades. I've seen this many times over. I've had these conversations with clients thousands of times over, and many advisors have. Speak to your financial advisor. If you need a good retirement plan, if you're close to retirement and these things scare the crap out of you, it's time to sit down with a financial planner. Reach out to our office if you don't have a planner. We'd be happy to sit down with you, go through, build out a plan, and show you how to avoid these emotional decision-making for down the road that are costing you so much money, so much stress. you're losing sleep over it. It's not healthy. So make sure in times like this, you're not making emotional decisions that are costing you even more down the road, right? Be proactive, not reactive. And in times like this, too many of you are being reactive because you haven't been proactive. You've avoided it. And I actually just talked to a few people over the last few days that have even admitted that to me. Like, Adam, I have been very hands-off with my planning, my investments, my retirement. It's right around the corner. And I need to take the bull by the horns. I need to take charge of my investments, and we want to partner with you guys to make that happen. So again, take these opportunities as a learning opportunity, not as an emotional, go crazy, drive sideways type of thing, but a learning opportunity. Where can we do things better? How can we change things in our day-to-day so that we're better set up for when this happens again down the road? My next point is that a good retirement plan is built for times like this. And I see it with our clients that we work with on an ongoing basis for the retirement plans that we build, in that we expect times like this. Like I said at the beginning of the video, we're gonna have another one probably next year and the year after, maybe 2 the year after that. Like, it's going to continue to happen. I don't know what those moments are going to be, but they're gonna be headline news, markets are gonna drop, it's going to affect us in our day-to-day life. But if you have a really good, clear retirement plan, your plan should be built for times like this. And that's where having that cash wedge, know where your cash flow is coming from. And then build your portfolio to match that cash flow. If you need $40,000 out of your RIF every year, make sure you can get $40,000 out for the next 2 to 3 years without selling any of your investments. If that's not your current structure, then your retirement plan isn't built for times like this, in my opinion. And you need to make some changes so that when we have this next event, you are well prepared for it. Some other ways to prepare for times like this going forward are to stress test your plan with your advisor. Look at different inflation rate of return, right? What happens if my partner or spouse dies? What happens if rate of return is only 4%, not 6, or 2, not 10? What happens if inflation goes to 4% and stays there for a little while? Am I going to be okay? Will I have to deviate from my plan? And what does that look like? Have these discussions with your planner to see what it looks like. But again, times like this should not derail your plan. It should be stress tested for this. You should have a plan around these events because they will continue to happen. And finally, use times like this as a check-in opportunity. Check in with your financial planner. Check in with your financial plan. Is it still on track? What do things look like? Right? Like last year, we had a really good year in the market. A lot of people made 10, 15, 20, 25%. Well, what do people do in times like that? People spend more. Well, I made more money, I'm gonna go spend it. I'm gonna do the rent of the house. But they're not prepared for when markets come back down. Again, markets average out over a medium to long period of time. Don't ride the highs, don't ride the lows. Right now, as far as headlines go, the way the markets have been reacting, we're in a low right now. Don't ride the lows, just like you shouldn't have ridden the highs, right? Keep a constant plan. Make adjustments ongoing, sure, but don't ride those highs, because if you ride the highs, you'll end up riding the lows. But again, a great opportunity in times like these to revisit your plan. Is it on track? Do you need to make changes? Is it built for times like this? So take this opportunity to sit down with your financial planner and review your plan. Get an updated plan. Understand, like, okay, if this happens again, where do things sit? What happens again? Stress test it. Is your plan built for times like this? Sit down with your planner and figure out if that's the case. So if retirement's on the horizon, or maybe you're already in retirement and times like this scare you, you don't have a proper plan, you really are just flying by the seat of your pants. And that is a lot of you watching this video, trust me. I talk to you every single day. It's time to get a plan. It's time to take moments like this, review things, and make sure that you're not thrown off next time it happens. Because again, it will happen again and again and again through retirement. So if you need help with that, reach out to our office. You can learn more about our services, which is retirement planning. Our team, we have 8 CFP professionals. We focus on retirement planning, making sure that we build a clear plan that will walk you through retirement. We look at tax planning, estate planning, when to take your government benefits, CPP and old age security, and everything else. You might have a corporation, rental properties. There's a lot of moving parts when it comes to retirement, and you need to make sure that's all dialed in and working for you. So at times like this, you're not affected by it. So you can learn more at parallelwealth.com/planning. We'd love to help you out. You can learn all about our planning. The pricing's on there, sample plans, all of it's on our website, so check that out. We'll see you in the next video.